Step into the world of Founders Dinner. Stories of entrepreneurial wins, losses, and lessons. Where the essence of entrepreneurship is unraveled in its most authentic form. Stas Balanevsky serves as your guide on this journey of discovery and inspiration. In each episode, Stas brings together entrepreneurs from diverse backgrounds to share their stories. It's not just about their victories, but more about the resilience and adaptability they've shown in the face of adversity. These narratives are more than just stories. They are lessons in courage, determination, and the relentless pursuit of success. So whether you're an aspiring entrepreneur, dreaming of launching your first venture, or an established business leader seeking new perspectives, Founders Dinner is your invitation to explore the transformative power of entrepreneurship. And now, without further ado, let's welcome the host of Founders Dinner, Stas Balanevsky.
Welcome to the Founders Dinner podcast. I'm your host, Stas Balanevsky, and I have the pleasure of having Rodney Reisdorf with me as my guest today. Rodney, how are you?
I'm great, Stas. Thanks for having me. Appreciate the opportunity.
Yeah, thank you so much for coming. It's always great to have another entrepreneur from the 716 on.
Yeah, absolutely. I love talking about startups and entrepreneurship in Buffalo and all the great things that are happening in our city.
That's awesome. So start us off with your entrepreneurial journey. Like, who are you? Where have you been? Where are you headed? Give me the story of Rodney.
Yeah, sure. Well, I appreciate that opportunity. So I'm the CEO and co-founder of a company here in Buffalo called Verivend. And the way that I like to describe us in a nutshell is we're like Venmo for private capital. So I'll get into more of what we're doing and why we're doing it. But we're a fintech company. I've been born and raised in Buffalo, went to college here, went to Canisius. And throughout my career, I've had the fortunate opportunity to be part of several early stage high growth startups, really before there was even a startup ecosystem here in Buffalo, going all the way back to the early 2000s. And through those experiences, I've been able to help build and shape some of these startups into very successful companies, from the higher education industry to insurtech, and now with Verivend. And really the common theme in all of these early stage company experiences for me was they were all focused on disrupting legacy industries with really cutting edge technology. And that's exactly what we're doing and why we're doing it here at Verivend, to change how private capital moves.
That's so awesome. And so on point. I was lucky enough to be an early investor in an amazing company that there have been documents flying back and forth lately, and a check has come in, which is always amazing when you're an early stage investor. And there's friction.
For sure. There's a lot of friction. And what we're doing is we're solving real problems for private investment transactions and really trying to eliminate not only the friction, but just all the wasted time and the manual repetitive tasks and all of the security risks because of the checks and the wire transfers and the status quo of everybody exchanging sensitive bank account information of, hey, here's my bank account, send me a wire here. Oh, let me get your bank account so I can send you a distribution there. It's 2024 and people should no longer be okay with the status quo and all of the friction and all of the security risks of exchanging sensitive bank account information.
Yeah, true. When you send out your routing number and your account number, you're like, well, here you go.
Right. And there's just so many opportunities to have that be intercepted or compromised. The one stat that I always like to talk about is the average amount that's taken from an investor per compromise or per capital call scam is $809,000, which is just an incredible amount. And it's no surprise that cyber criminals are continuing to target the private markets and private market transactions, just because the dollar volume that's going through and the information that's being exchanged is just so large. I was a cyber criminal. I would definitely go after the 6, 7, 8-figure transactions rather than small little 1-2 consumer transactions.
That makes perfect sense. It's funny when you hear about a side of a market that was unknown to you. It's just like walking through another door and then you're in another world again. And like having done a bit of research on Verivend, I'm like, why did this company that I'm invested in not use your technology? I mean, the answer didn't exist before the investment, but It's just
Exactly. Yeah. And we get that question all the time of why now? Why doesn't this exist? And it's pretty simple that no one has really challenged the status quo, and no one is really focused on bringing a Venmo grade or a PayPal grade type of solution that we've all come to know and expect in our personal lives to the private market transaction industry. So there's a ton of great service providers out there. There's other platforms that do this behind the scenes, and there's great fund administrators, but it really comes down to that common denominator but behind the scenes where it's all the same. It's all still wires and checks and manual reconciliation and exchanging bank account information. Modern, sophisticated payment platform that is revolutionizing how private investment transactions are made. And that's exactly why we're doing what we're doing.
amazing. So where are you headed? Like you mentioned PayPal, and the first thing I thought it was like, okay, the Verivend mafia around Buffalo, right? Huge exit, building more and more and more entrepreneurial ecosystem.
Yeah, so where we're headed, we're just about to cross the $1 billion mark in total transaction volume, which is going to be a great milestone for us to achieve.
Yes.
And yeah, thank you. That's going to be just a great mark of the fact that we are solving important problems. People believe in the solution that we have, and that it's really delivering value to those customers. And those customers are any asset manager or investment sponsor in really any asset class. So we're asset class agnostic. We don't specifically focus on one or the other. So our customers span private equity, venture capital, real estate investments. We've even got some hedge funds on our platform. We're looking at the private credit, private debt market, just because that's been so hot in recent times. And the nice part about that is the common denominator across all of those is still the pain and the effort, the friction, and the lack of security of how capital transactions are being raised and deployed. So the goal is to really be the financial infrastructure and connective tissue between investment sponsors who are raising and deploying capital, their investors, and give those values to them of getting investment sponsors and GPs back to, the reasons why they became GPs. Nobody starts a fund or nobody starts an investment syndicate to do all of the manual, repetitive, error-prone tasks. And you've got two funds that investors can invest in, and one is asking for checks and sending out wiring instructions, and one is using Verivend. There's a reason that Amazon makes things so easy to buy, right? You swipe and you bought it. So it's our same methodology in Verivend of just making it a very frictionless, seamless process for investors, because if investors can invest easily, then they're going to continue to do that, and they're going to continue to re-up, and then just keeping it secure for both sides of the transaction.
That's so cool. So when were you infected with the entrepreneurial bug?
So it was pretty much right out of grad school. I got my undergraduate degree in computer science. I went right on to get my MBA, both at Canisius here in Buffalo, because frankly, I had no idea what I wanted to do when I grew up. So I just punted that for a couple more years. And I got the entrepreneurial bug when I started at a higher ed tech company here in Buffalo called Liquid Matrix back in the early to mid 2000s. And it was admissions and alumni software. And that was obviously before there was even a startup entrepreneurial ecosystem here in Buffalo. Stayed there for several years, saw that get acquired and get into a bigger company, which was good. But I always found myself wanting to go back to that early stage. And then fortunately got introduced to another company here called Liaison, which was a health tech, insurtech company back in the early 2010s, and joined that company. And then I felt all of those same fulfilling emotions over again. And then same pattern. There was an acquisition, there was a merger, and over a period of about a decade, went from a very small company to a very large company. And those things are great, but found myself wanting that early stage again. And my co-founders and I got together about 5 years ago and formed Verivend because our initial focus was B2B payments are broken, and there needs to be a modern, easy solution to facilitate that. And that was the original genesis of Verivend. But again, just solving legacy verticals with cutting edge technology.
So awesome. So I'm sure you'll agree as an entrepreneur that you don't learn a single thing by winning.
Right. Totally agree.
Because it's easy.
Yeah.
When you're winning.
If it was easy, everybody'd be doing it, right?
That's exactly right. So the real goal here is to create a library of all of the stuff that we as entrepreneurs have messed up and learned from. because I'm hopeful that the people that are going to be listening to this will be entrepreneurs, will be, people that are contemplating taking that entrepreneurial leap and going through all the stories and all the misery and all of the missteps and all of the learning, which they're still going to have to learn on their own, right? You can't describe what skinning your knee feels like until you actually do it. But maybe we can shorten the window of misery. Or if you look at you're familiar with the concept of the dip, right? Shorten your time in the pit of despair. So I would love to hear a story of where you were like, yep, this is the move. And then you realized that was not the move.
Yeah, geez, which one? There's so many stories, but
the one that you can share without violating any confidences.
Yeah, no. So yeah. It's your point. There's certainly no shortage of stories and no shortage of missteps and failures that put you on the path to success. So the one that I always like to share is really the founding story and the story of how we learn to focus and really define our core value prop in the market and our ICP, our ideal customer profile. As I mentioned, the initial genesis of Verivend was we felt passionate that B2B payments were broken and that businesses needed a simple and secure solution that brought those same Venmo-like benefits that we've all come to enjoy in our personal lives. So in the early stages of Verivend, we had that why down. So B2B payments are broken. We obviously had the what. It was going to be a modern cloud-based software that facilitated B2B payment transactions. And then we had the how down as well, right? Let's make B2B payment transactions transparent, efficient, secure for all parties involved. So that why, the what, and the how were pretty clear. The part that was completely unclear was the who. So when we originally launched in market almost 4 years ago to the day in May of 2020, we had a pretty broad focus. So we were focusing on pretty much any legacy vertical that had just historically been challenged with payments. So that included everything from logistics companies to waste management companies, industrial companies, manufacturing companies. We saw some organic expansion into law firms and doctors' offices. And we felt like, yeah, this is working, right? Like all these.
Like APAR.
Yeah, exactly. It was APAR. And
okay, interesting.
Yeah. Right. We were always solving the right problems for payments by focusing on making them transparent, secure, and efficient. But it never felt right. And it didn't feel right because other than that common denominator of these APAR modernization that these verticals needed, there really wasn't any other commonality across them. And we just felt like, number one, we were making minimal progress in a whole bunch of different directions, which really isn't progress when you think about it. And two, we felt like we were just getting pulled in all these different directions because what a logistics company needs beyond just APAR is completely different than what a law firm needs and what a doctor's office needs. So we just felt like we were kind of spinning in a circle here. How we corrected that was a couple different ways. There was both objective and subjective things that led us to finding the path. And like I mentioned, the subjective side of it was something just didn't feel right. My co-founder and I would sit there and we'd be like, man, what's missing? And we really couldn't put our finger on it. And then I'll never forget this. About 2 years ago, we were having a board meeting and one of our board members asked the question, hey guys, how are things going? And we're like, oh, it's great. We're doing payments for these industries and these industries. And he's like, oh, that's great, guys. But talk to me about your ICP. Who is your ideal customer profile? And we're like, oh, it's anybody that needs to move money. It's a trucking company. It's a logistics company. It's a manufacturing. It's the doctor's office. And he said, that is not an ICP. You really need to focus on who the true ideal customer profile is. And then we realized that we were just focusing on too many things at once. And that lack of focus and that lack of what is our core value prop, but to who, was really the big misstep that we learned from.
That is awesome. So I see lots of entrepreneurs that do that, right? They're just like, okay, our tech works here, 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 and here. So yes, it is shotgun instead of rifle, but in their heads, I believe it feels like a rational hedge. I'm going to catch lightning in a bottle because I'm looking at 17 different verticals and giving 1/17 of my attention to each of them, right? where it's usually
Sure.
1/10 of your attention to 10 of the 17. And then there's just, it's a nightmare, but they feel like they're hedged. Get me over the head trash of, I need to be in 7 different verticals because what if one of them hits, versus what you did, which is to go drop the shotgun, grab the rifle.
Yeah, exactly. And it's really going from the broad based approach to the very focused approach. And I like what you said about trying to catch lightning in a bottle in 17 different areas. But you think about it, you as a founder, as an entrepreneur, cannot be in 17 different areas at once. So there might be lightning striking in a number of those 17 different areas. But if it strikes and you're not there with the jar or the bottle, then you miss it. So I feel that you've got a much greater chance of being able to catch lightning in a bottle if you're standing in the same place with that same bottle and waiting for the lightning to strike. And it's the hardest thing for an entrepreneur or a founder to do is to say no, right? Because
Mhm.
you don't know which one of those paths is going to lead you to success. And it was incredibly hard for us to do, but we knew that if we didn't do it, we really weren't going to go anywhere. We were just going to be making incremental progress in a whole bunch of different directions and not meaningful progress in any one direction. I think every entrepreneur needs to find out and figure out what is their focus, what is their rifle approach. And for us, we actually created it ourselves. I always say we created our own aha moment. And that was because when we raised our seed round about 2.5 years ago, we had all of our subdocs signed. We had great participation and support from the East Coast, the Midwest, the West Coast, right here in Buffalo. And our law firm said, okay, you've got all your subscription agreements signed for your investment. How do you want to take in the funds? We can send out our escrow wiring instructions. We can take it in. You can share your bank account instructions. And I said, hold on a second. We've got this great payments platform that is focused on more traditional AR and AP. But in my mind, it really wasn't all too different than sending out a request for funding and getting that in. So I said, let me try something. So let me go to my investors and see if they would be open to funding their investment right on our own platform. And of course, all of them said, yes, of course, we'd be more than happy to fund our investment into the platform that we're investing in. And then that just created this amazing aha moment for us where through that experience, we said, wow, that was a really efficient and easy process. As a founding team with very limited time, we didn't have to spend a ton of time or money paying someone else to do it. And it gave a great experience to our investors and a very frictionless investment experience. So we not only saw it firsthand, but we got secondhand feedback from our investors that further validated this, that said, geez, that was a great experience. Can we use Verivend? Because we're sick and tired of the pain and the friction of doing capital raising and distributions. And at that time, we still weren't ready to just fully commit to that. So we said, yeah, sure. I guess we can add private capital and investment transactions into the 18th bottle that we're trying to catch lightning in. But we realized something very quickly over the course of about a quarter. So we saw this 80-20 rule start to develop where 80% of the revenue that we were now generating and the transaction volume that we were seeing on the platform was coming from this very small 20% segment of investment transactions on the platform. I said before, it is subjective and objective in terms of trying to read the tea leaves. That subjective feeling of just something doesn't feel right, and that objective fact where it was a great experience for us, it was a great experience for our investors, really led us to the strategic decision to say, you know what? Nobody else in the market is challenging how private capital transactions are happening. And we saw it for ourselves how great it was. Our investors love it. So this seems like all of the right cues for us to say, we're going to push everything else to the side and we're going to go from shotgun to rifle and only focus on the private markets and be that Venmo for private capital.
That's amazing. So first client, right? You were your first client.
Ourselves. Yeah, exactly.
You hear stories like that sometimes, and that is so cool because that then, of course, takes the fear out of it because, right, you have the kind of objective like, I don't know if it's right, blah, blah, blah. You become your first client. You're like, there's something here. Then you start to get some proof. And at that point, it makes it so easy to burn the boats.
It does. Easier, I would say.
Easier. Yeah, sure.
There was absolutely still a lot of fear, a lot of unknowns.
Yeah.
Still, honestly, some hesitancy. We, as a founding team, had a lot of discussions with our board and our advisors, and really took a hard look at both sides of, do we just stay as a more broad-based, focused AP, AR solution? Do we really just carve off all of that and go all in to being that Venmo for private capital? And ultimately, the story is that we did. And it was also hard because we had B2B customers that were getting real value out of our platform that we had to wind down and offboard. And that was incredibly hard, where you've got paying customers getting value out of the platform saying, is there anything we can do to stay? That we love this platform, but we knew if we kept them on, we would just be dragging that along with us. And it wasn't fair to us, but also it wasn't fair to them, because as we changed our focus to private capital, we didn't want to give them or dilute their experience that they were having with Verivend. So we just had to have those difficult conversations to say, what, we as an early stage company, we've decided to focus in a different direction. And thank you for your business and your early support, but we can no longer support you.
Wow. Yeah. It's funny. I went through the exact same thing when I shifted from, I used to build CRMs and do all of that stuff in the past. And then when I became an EOS implementer almost 4 years ago, I was still hanging on, right? Bit of a hedge, bit of a love for my current clients, and was just so resistant. And I just kept putting a date out there of flipping the switch. And finally, in a Vistage meeting, one of my buddies, I was in a trusted advisor group, and he'd known me for half a dozen years. And he finally said, drag it behind the woodshed and kill it today. I'm like, I can't leave my clients in a lurch. He goes, you're going to leave them in a lurch in 6 months. And you're not focused on it now. So instead of saying, hey, listen, this business is going away, I can't help you anymore, he's like, you're going to do a bad job for 6 months and then leave them high and dry. That's actually true.
Yeah. So, we had the same realization that we were just going to be delaying the inevitable. And the sooner that you can have those conversations and help the clients that we were offboarding find an alternative solution, and that we could really get to focusing on what we knew we needed to focus on, the better. And it was this incredible moment of clarity once we did this, because we felt like we were really no longer lost or just going in circles trying to figure out who we were and who we were to the market. At that point, we realized, yes, this is what Verivend's mission is. It is to modernize and revolutionize private capital transactions. And the beauty of that was we didn't really have to change anything in our product. And in fact, we actually were able to cut off a lot of features that we thought we built for the right reasons for AR and AP B2B customers that nobody really liked. So we were able to actually operate much more efficiently, get rid of a lot of dead weight in the product, and not worry about tech debt in the future, and be a lot more nimble, and just that rifle-like focus to one single market and a core value prop to GPs and LPs.
Amazing. Congratulations. That is tough sledding.
Thanks. Yeah. Like we said, the hardest thing for an entrepreneur or a founder to do is say no, because you never know which yes is going to lead you to the promised land or get you the lightning in a bottle. But in my opinion, if you say yes to everything, you're never going to be good at anything.
Say yes to everything, you'll never be good at anything. So true. So awesome. What an absolute pleasure. So to the people listening, put down the shotgun, grab the rifle, and commit. Right? It's funny, the famous Oracle of Omaha, right? He says successful people say no all the time, right?
Yeah, exactly. You're never going to define who you are by saying yes to everything. And I would say the main lesson, or one of the main lessons I've learned on the journey with Verivend, is don't be afraid to say no, and don't be afraid to say no too soon, because you're going to be delaying the inevitable. And by defining who you don't want to be, that's going to help you define who you do want to be and who you are.
That's phenomenal. So about the business and where you're headed right now, are you actively raising right now? Because I'm sure a lot of people that hear this are going to think, I think I want into that.
Yeah, I'm always actively raising, whether I'm actively raising or I'm closing a round. We actually are just wrapping up a round right now. But by saying yes, I'm always actively raising. As much as Verivend automates the capital raising process on our platform, there really is no replacement to the soft skills and the relationship part of what it's like to raise money as a founder. I say I'm always actively raising, whether I'm actually doing that or I'm actively raising just by building those relationships and telling the Verivend story so that the next time we do raise a round, there's always that foundation of trust between myself and potential supporters and investors and the mission that Verivend is going after, because you always want to make sure that you've got that foundation and that cadence established so that you're not having to start from square one when you actually need to raise funding for your company.
Right. That's awesome. Well, we'll make sure that all of your contact details are in the footer of the podcast, so people that want to reach out to you can. Would you have an objection to that, or are you okay with?
I'm totally fine with that, and I appreciate it.
Awesome. That's great. Thank you for sharing your story. I think this is going to make some big impact in people's lives when they're looking at the 17 customers that they really want to target, because they're sure that one of them is going to buy.
Yeah. And that's not to say you can't go after the other 16 once you've really nailed the first one. And one of our other advisors says that TAM always leads to TAM, where if you focus on one addressable market, it's going to unlock others. And we've already seen that happening with Verivend. Again, I would say to other founders and other entrepreneurs contemplating the same challenges that we went through at Verivend, you're not saying no forever. You're just saying no for right now. And it's a now, next, and later type of model where for right now, you need to just be that laser focus with that rifle approach. And as you land and expand in one vertical, you can always go to others, but you really need to do that first with one and really carve some progress and then focus on others as you grow and scale.
Spectacular. That's awesome. And I think with that, that concludes this week's episode of the Founders Dinner. For those looking to connect with Rodney, his link's going to be in the description. And this is Stas Balanevsky signing off. I will see you all next week.
That's a wrap on today's episode of Founders Dinner. Stories of entrepreneurial wins, losses, and lessons. Once again, we've journeyed through the inspiring and challenging world of entrepreneurship with Stas Balanevsky, uncovering stories that illuminate the resilience and adaptability at the heart of success. Each narrative shared today is a testament to the unyielding spirit of our entrepreneurial guests, providing lessons in courage and determination. We hope these stories have not only entertained, but also inspired you. Whether you're taking the first steps in your entrepreneurial journey or are a seasoned leader in the business world, Founders Dinner is more than just a podcast. It's a community of learning, inspiration, and connection. Don't forget to subscribe to our podcast for more insightful episodes and join our vibrant LinkedIn community to continue the conversation, share experiences, and connect with like-minded entrepreneurs. Until next time, keep embracing the entrepreneurial journey. This is Stas Balanevsky, thanking you for being a part of the Founders Dinner family. See you at the next dinner.